Hello everyone, welcome to the channel. Today we're looking at a stock that had earnings this morning, and that is the 3M Company, ticker MMM. This is a stock that I have held for quite some time. I am down on my position, as you would assume from the stock chart that we're looking at here, and I want to know what's going on with it because I remember back in the day when everyone was saying getting it under 200 was a great price. Well, it's down to about 100 right now. So, is this an even better price, or has something changed with the stock since all of that occurred? So, I own 13.61 shares and I am down 24% on my position. That's just equity. I have made dividends and traded options on it. So, not nearly that far in the hole if you look at the bigger picture. But what we're looking at here, we see a peak back in 2018. February of 2018, there was a peak, and then we started this long downtrend where we touched again 206, 531, 2021. And ever since that touch, we've been on an even steeper drop off. We've dropped at this pace, just in a very tight channel, very quickly, losing almost $100 in just a few months. There isn't a whole lot of support or resistance that I can see with this stock, at least looking at this scale. It looks like there's quite a bit going on at the $200 level, which you would assume that there would be some sort of support or resistance there. Changing the most significant digit is usually a pretty big factor. And then we see quite a few touches. It had a hard time breaking above $89 back in 2013. It was trading in that range from 2010 to 2013. And it almost looks like we are headed right back down to that level. So we'll see if that happens. But that is the technicals. Now let's get into the fundamentals and see what's going on under the hood. Here are the numbers that we're all familiar with at this point. The fundamentals of the company, where we see quite a bit of red, at least last year. They did do some divestiture. They branched off the health foods portion of their business and declared bankruptcy to help with the earplug lawsuit that was ongoing. Looking at the earnings, they mention a few lawsuits that are ongoing, but that is likely the cause of some of these declines and some of the numbers that we'll see today. But does that really affect the core business? That's the question. So we see they typically are growing about 2% a year, rather low, but they are a massive company. And they're just chugging along, paying out dividends. If they were able to hold their value, that wouldn't be awful. But apparently they're not able to do that. The cost of goods has been climbing on them at a faster rate, nearly twice the growth in revenue. Their gross profit has been declining, almost flatline over a 3-year period. Little to no growth in gross profit. Net income has been growing pretty well, 8% a year. This last year, 2.4 decline. Their expenses have been growing, nearly 5% a year, 7.7 last year alone. Their EBIT has been declining, 2.3% a year, or 12.3% a year, 44.55 this last year. So we see that this last year's numbers are a massive anomaly. Looking at things, this is the story that we've seen before. Revenue is growing, not fast enough. The cost of goods and expenses are outpacing the revenue. But at least when it comes to the balance sheet, they're moving in the right direction. Their assets are growing nearly 1.3% a year. They did decline that amount last year, but their liabilities are declining. I believe this is one of the first companies that we've looked at that actually shows a decline in their liabilities, not an incline. And it's declining at 2.8%. The book value, we do see a negative book value. It is trending towards the positive direction, increasing nearly 35% a year. So here in a bit, we should see a good value there. But from the earnings per share, we did see a earnings per share of $10.10 last year, which would give us a value somewhere below $200. Analysts' expectations for this year are $8.60, which is a rather large decline, nearly 20%. That would value the stock at $172 or lower. For a free cash flow, that has been declining. There is hope there, though. They do talk about this in the earnings, and we've seen a nearly 11% decline year over year. Even though that's happening, we still have around $140 share value, and at this pace, it'll go down to 130 this year. The share count has been steadily declining, which is something that we like to see. They buy back nearly 1.5% a year. The shareholders' equity has been increasing, compounding. This last year, it did decrease, but we've seen the numbers for last year. They're not very good. Dividend, they currently pay a $5.96 a year in dividends paid out quarterly. They've been growing it at nearly 1% a year. This last year, it was 0.7%. They grew it 1 cent per quarter, which is what they have been doing recently. That for a dividend like that, I'd be willing to pay up to $170 for. Approximately the same with the growth. It's pretty small on growth. And ROE, we see numbers around 40, which is towards the lower end of what we like to see. So in all, the share price, in my opinion, is somewhere around the $170 range. After everything's factored in for their compounding, we'd be looking at something more towards the 160 range by the end of the year. So it is a declining company based on their trends unless they can fix those. And now we can take a look at the earnings. So they announced earnings 3 months ending March 31st, comparing this year to last year. They didn't give us percentages. Typically, that's because things aren't too good. So I gave them for us. I did the math, and it's over here on the side. So we see net sales decline of 9%. The cost of goods is down 4.4%. The total operating expenses are down 5.5%. So those two numbers are good. That is something that we like to see. The EBIT is down nearly 35%, down to 1,189 from 1,603 the same quarter last year. That is not a good trend. The bottom line is definitely where we want to see growth at, not a decline. But we need to look at what the divestiture is and what they branched off and what the restructuring that they plan to do is going to impact. So their total net income attributable to 3M is down 24.9%, and their earnings per share are down 22%. We do have some good news, though. Their assets are up 0.9%, which if they can continue this trend, they'd be a little under the 1% that they typically come in on year over year. Their total liabilities are down 0.47%. So those are both moving in the proper direction. That's what we like to see. Total equity was up 3.9%. We like to see that as well. So this stock seems to be a very large established company that isn't going for massive growth. They're kind of maintaining what they have and growing it slowly over time. And they pay a lot of their value out to shareholders. Like a lot of it. They're buying back shares and paying out dividends is what a lot of the money that they bring in goes to. Now, they break it down by the geographic area and the change in sales. So we see that Asia Pacific had a rather large decline, potentially due to the COVID lockdowns, especially in mainland China. Europe saw a 4.5% decline in organic sales, down 10.4% overall. Worldwide, they saw a decline of 9%. If that's year-over-year numbers, it could be due to heavy mask sales in 2020 and 2021, and that has recently declined as people aren't as worried about COVID as they were. We can see healthcare organic sales were up. The total change was down 5.6%. The majority of the change actually came in transportation and electronics. If we can continue down, we can see what their forecasts are down here, full year 2023 forecast. So net cash provided used in operating activities, 5.8 to 6.3. Adjusted free cash flow, this is the important one, 4.2 to 5. Last year they came in at 3.8. 5 would put them back more towards where they came in at in 2019 and would really help to boost the valuation of this company. If they can come in at a 5, if I change the numbers in my spreadsheet real quick and we look at what would happen if they came in with that 5 that they're projecting on the high end, it put the stock value back up to 182 on that front. So it raised that valuation metric $40 of share price. The total net income attributable to 3M, 4.7 to 5. That's a decent number. I'd like to see it a little bit higher. And they talk about quite a few things down lower. Again, I suggest that you pull this up and read through it if it's something that you're interested in. If you hold shares, you should take a look. We just are doing a quick glance overview. So the net costs of significant litigation. They say that there are litigation relating to respirator, masks, and asbestos, PFAS-related other environmental and combat arms earplug matters. Not a whole lot comes out of this. They just say that 3M made payments of approximately $73 million and $161 million, respectively, to net costs for litigation. Divestiture, this is what I was talking about earlier. They made payments of nearly $54 million associated in divestiture costs with the splitting off of their food safety business. They made payments of approximately $3 million and $1 million, respectively, in divestiture, and that's really all that they give in this report. So my outlook on this, I'm going to hold the stock. I do see that it is a declining company, but it is worth significantly more than it is currently priced at today. And there's a 50 to 100% upside in the current share price from what I'm seeing, especially if they can rebound that cash flow. What we would really like to see is them rebounding that total top line revenue, but we'll see how they come in by the end of the year. They saw a decline this year. They mentioned that it was due to geographic problems and inflationary and currency conversion issues, similar to what we've seen on other stocks. So it's the same story yet again. And we'll see what the next quarter brings. I mean, I'm not going to sell out. It was up this morning when the market opened right after these earnings, and by the end of the day, it was down just slightly, almost to where it had opened up. So it's trading at $104. I might even go buy some more because I do see the value there. I do think it's very undervalued, and it would be a turnaround play. I want to thank you guys for watching, especially if you've made it this far. Please like, comment, subscribe. I'm trying to bring these videos to you every single day. Hopefully you take something from it. You learn something from it. Let me know what else you want to see. What stocks, what topics. I am all ears, and I would love to do what you guys want. Okay, with that, I'll catch you next time.